This video provides a solution walkthrough for exercise 2-10. This is a good question to help review your understanding of the accounting equation and how to solve for missing items using T-account reconstruction. Here's the data for our problem. We're given some information about changes in account balances, with the exception of retained earnings for Desert Dorn Limited for the fiscal year ending 2025. So you can see we have various accounts ranging from accounts payable to unearned revenues, and retained earnings as a question mark. Our requirement here is to calculate the net income for 2025, assuming there are no entries in the retained earnings account except for both net income and dividend declaration of $44,000, which was paid in 2025. And the hint is to use the accounting equation to help solve the question. The easy way to solve this kind of problem is to think about reconstructing the retained earnings account. So here's a T account for retained earnings. We have no beginning or ending balance because there's nothing provided, but we do know that dividends declared are $44,000. So that goes in as a debit on the left side of the T account. And our mystery number, question mark, is the net income. So what I'm going to do here is prepare a table based on the accounting equation. And the accounting equation, assets A equals liabilities L plus equity E. Now what we can do is we can extend that or convert that to say, well, this also applies to changes. The change in assets is equal to the change in liabilities plus the change in equity. We can also reframe the equation as assets minus liabilities equals equity, or the change in assets minus the change in liabilities equals a change in equity. So now let's bring back our list of accounts, and let's highlight all of the items that are considered to be assets. Working from top to bottom, we have net accounts receivable with an increase of $15,800. We have cash with a net increase of $41,670. We have inventory with a change or increase of $218,400. We have fair value through net income investments, which saw a decrease of $46,500. And then we have intangible assets or patents that had an increase of $14,000. When we net out the decrease against all the increases, we have a net change or net increase in assets of $243,370. Now let's do the same thing for the liabilities. Working from top to bottom, we have a decrease in accounts payable of $23,400. We have an increase in bonds payable of $46,500. And we have an increase in unearned revenue of $45,200. Those are all of the liabilities that are provided. And so when we net out any increases and decreases, we see a net increase in liabilities of $68,300. Now, we do have some equity accounts in this list, but we don't have retained earnings. So we really can't add all of the remaining equity accounts up to determine what the net change in equity is because we don't know the retained earnings. But what we can do is figure out the net change in equity by taking the change in assets minus the change in liabilities. So if we have an increase of $243,370 in assets and subtract the increase of $68,300 for liabilities, that means equity had increased by $175,070. Then we can start to work backwards from there and deduct any of the changes associated with the common shares, which we have, and the contributed surplus to figure out the retained earnings. In the list, we have an increase of $87,000 for common shares and an increase of $18,600 for contributed surplus. So if we take our increase in equity of $175,070 and subtract the increase in common shares and contributed surplus, we end up with an increase in retained earnings of $69,470. In essence, we use the ending change in equity and the contributed surplus and common shares account to plug the missing retained earnings balance. Now most of the heavy lifting is done. Let's bring back that T account for retained earnings now that we started the problem with. We don't have a beginning or ending balance for retained earnings, but we do know that retained earnings increased by $69,470. So what we can do is we can put any number as a beginning balance. We could put 0, I'll put $100,000. And if we know that the change in retained earnings was an increase of $69,470, that means that the ending balance, based on my selected beginning balance, would have to be $169,470. Now I have enough information to reconstruct the T account. So if I take the ending balance of $169,470 and I add the dividends declared of $44,000 and subtract the beginning balance of $100,000, we end up with a plug number for net income of $113,470. And that's the answer to our question.